What's going on, everybody? Pumped to have you here this morning. We've got an excellent show as always. Have an excellent guest today, and so it's going to be great. A great show. It's a Money Talk Show thing where we talk about things relating to crypto and real estate here. So if those are topics that are interesting to you, you're interested in wealth building, you're in the right place. That's all we do here. So, welcome. We're pumped to have you. We're doing our best to be the bridge between entrepreneurs, real estate investors, and cryptocurrency because we feel like cryptocurrency is the biggest opportunity over the next few years, and it's not even close. So welcome. Now, with that, Corey, go ahead and take it away.
Absolutely. Crypto Miners with Corey Garrett, and just super excited to be here with all you blessed gentlemen and gals on this cryptocurrency journey, a journey to legacy wealth building via crypto, and then maybe some wealth preservation via real estate, and really bridging the gap between all our entrepreneur real estate guys and crypto guys together. And it's just been a blast so far because we are in the right time at the right place. And guys, this is the DeFi Crypto Alliance show, and this is going to be the Wen Moon TA session with Sprack Burger, who is our guest today. He's an amazing individual. We'll let him tell you his story. He's very successful in the crypto space. In fact, he's done some other type of trading before crypto, but he was one of our private groups, and that group, he did a TA session for the group, and he just kind of nailed it. I mean, it was a beautiful TA session, and I was like, man, you got to come on our show and do this for our audience, and maybe even make it a regular an event of Wen Moon TA with Sprack Burger. And guys, so I'm gonna let Sprack Burger take it from here. Sprack, tell the audience your story, who you are, where you came from, maybe some times you got wrecked, maybe some wins that you had, and how you found Richard Hart and got into this ecosystem.
Yeah, man. That's like they say, if you haven't got wrecked in crypto, you haven't been in crypto long enough.
It's a rite of passage, bro.
It's a rite of passage. Now, the first time I got wrecked in crypto was 2018. I bought the top. Well, let's say I bought along the way up at the end of 2017, and everybody got caught up in that frenzy. And, I didn't like mortgage my house or anything stupid like that. I was a very responsible investor. But when that thing crashed, it was just like, a lot of people just ran for the hills and they called it a scam. They said, this is it. They said it's dead. All the FUD that happens with any correction, whether it's a stock or it's a crypto. But I went the opposite. Instead of getting mad or angry or sad or negative, I went and got curious, and that's when I just started doing deep dives into the crypto bear market. That's when I first discovered Richard Hart. He was doing streams on like Ivan on Tech, and he was doing streams with and it's funny, Crypto Banter with Rand. He was doing Crypto Trader on, I think, network. It was either NBC out of South Africa or something like that, and he was doing content, and he was going to all the conferences, and that's kind of where I learned about Cardano and Charles Hodgkinson's, and I was watching his streams. And a lot of these guys were extremely smart, and I just wanted to follow them and participate in that. But yeah, that's kind of like how I got into crypto. But where I think I might have went wrong was I didn't go heavy enough into that bear market. I just kind of nibbled at it. I did. You see, I came from the risk adjusted portfolio management side. So, at that point, the volatility associated with stocks versus crypto is that you have this higher beta, and the higher beta should put a smaller percentage of that in your portfolio. And you do that in crypto too. You have like your blue chip assets that should have a bigger weight in your portfolio, and then your meme coins should be out like in the 1 or 2% of the portfolio, just in that risk adjusted curve. And so crypto was in the high risk adjusted curve of my overall stock portfolio. And so I allocated 1 or 2% to the overall crypto market as an asset class. And that's where I kind of made the mistake. But at the same time, I think just my approach to investing has always been conservative anyway. And now I'm kind of doing the opposite. I'm kind of going a little bit heavier on this big, massive dip because I did hit some pretty decent numbers on this last run, but at the same time, I also we like many of us, we lost in not value because I never sold, but the correction from the last bull market definitely took away a lot of those gains. So learning when to take profits, learning when to start to size up and get heavy are going to be key to this next run. And we should talk about like what we're going to be looking for in terms of technical patterns. That'll give clues to when we think this market is starting to level off and sell, and we could just keep an eye on it as the market kind of progresses.
What a cool story. So, so you said you're going heavier, and of course, like, we don't want you to disclose any personal information that would be self-identifying, but I think it's good for the audience to get a feel. So you said you allocated about 1 to 2% of your entire portfolio the last run in crypto. What percentages for you are you comfortable allocating this time around?
Yeah, so in terms of my, that's a good question. It's a good question because I basically sold everything for crypto.
That sounds like me and Dane did the same thing.
Yeah,
you
I'm
went from
1%
to 100%.
Well, okay, let me kind of like rephrase that. Everything that's not in a retirement account.
Yeah.
Anything that's not in like a Roth or an IRA or a 401k, whatever that they would allow us to do so. And yeah, everything I had in terms of stocks, everything I had in terms of like trading accounts and other assets, I just shoved it all into crypto. And actually, I started doing that on the last bull run. So I haven't really been into stocks since 2020. So I actually
once you get a taste, there's just no reason.
Yeah, no, I took advantage of the last bull market, and the cool thing about like the sacrifices, like with PulseX and Pulse Chain, and I was sending a lot of the coins that had already ran up like 10, 20 to 30x on me, and I would just take profits into the sacrifices. And so that was like a really good place to allocate that capital, especially if you were already up on some of these positions, and you can rotate that capital into a new project that's coming in. Yeah, so that was like one of the biggest wins that I could say, is that we were able to take profits into something that could become essentially like the trade of the decade, which is Pulse Chain and PulseX. In my opinion, I think it's going to be the trade of the decade. But like another thing about my background was that I traded for a prop firm. So I came from the Forex market. I was a Forex trader, and I started trading back in 2018, and I was doing a lot of the like you said, I got curious when we took a big market hit, and everyone took a hit. The stock market took a hit. The currency markets became volatile, and I got curious. So yeah, went down the rabbit hole, started looking at Forex charts, started looking at what we could trade 24 hours, what we could trade with leverage, and what we could trade with high liquidity. And there was nothing like the Forex market because you could take 50x leverage here in the US, and you could trade euro, which is highly liquid. You could do it 24 hours a day. So I was trading at night. I was trading early in the morning. But the only problem with Forex is that it is a 24-hour market, so you're going to be kind of stuck in a position for 3 or 4 days and watching like a euro trade. So you could be in like a $500,000 position for 3 or 4 days, and you're not going to get much sleep because it's a lot of money on the line. Obviously, it's you borrow this money from the broker based on the leverage in your account, and anyway, don't trade. if I have anything to say to people that want to trade, I would say don't trade. But I obviously I did, so it's like, don't do as I say, not as I do. But yeah, I learned a lot from that experience and from trading. And what I did was I actually stepped away from trading Forex because my spot positions in crypto were outperforming me. So
Really?
yeah, so just doing nothing was actually more lucrative than actively trading. Because if you're not trading, you're not making money.
Right.
So
Right.
you have to get up and you have to get in and do a bunch of research in the morning, set up a thesis, set up a criteria to get in, set up a criteria to get out. And you have to follow your playbook. And it's very strict and very rule based. We talk about having this scorecard next to you, and it has to match all these criteria before you enter a trade. And you have to know when you're going to get in, when you're going to get out, when the trade is invalidated, and when you need to be intelligent enough to say I was wrong, and this is where the market has shifted against me, and I'm going to remove the emotion away from hanging on to this position if it's in a losing position. So that actually helped me a lot with crypto, because nothing moves like crypto. And you can get emotionally involved in some of these assets. And as they're going up, they're pulling you in and they're tugging you on your emotions. You have to be objective. And that's where we have to learn how to take profits, and we have to learn how to scale out of some of these positions a little bit, even though they're running up and you think they're going to keep going up. You'd rather be in a position where you sold early than when you sold late. Because if you sell late, you missed all of that price appreciation and you never cashed out. You could be either at your buy-in or you could be below your buy-in. But yeah, so now I don't sell on a 2x, and that's where we we'll kind of start talking about how to scale out, especially like in some of these big Forex positions that we were in. When I was trading with a team, we would scale out 10%. So if price moves in your trade goes into your favor, we sell at 10%, but we would sell at a technical pattern. And we would look at something like, okay, there's some resistance above us. I want to probably take some of the risk off the table when we hit that resistance. And then now you're hitting, okay, we broke through that. There's another resistance level. And then there's another one. And like the bigger that resistance level is, the bigger you want to scale out. And as you're, even if the trade moves really hard in your favor and you're completely out, it's better to have money that day, hit your numbers, hit your quota for the week, make the fund perform, and actually it benefits the team. So there's nuances between working with teams and working by yourself. And it's really difficult, because when you're by yourself, it's like, who do I talk to? Who do I hold accountable, right? Because when you work with other people, it's kind of like, okay, what did you get into? Oh, I got into this. Where are you getting out? I'm getting out here. And it's like, okay, what did I do wrong? Because at the end of the trades, you have to go back and do your post-trade analysis and say, okay, this is where I made a mistake. This is where I could have got better. And you do some of these improvements and continuous measurable improvements. And then you look at your numbers, and your numbers determine how much size you should have. So all of this is supposed to be boring. Like trading is supposed to be boring. It's supposed to be like a job. You show up to it. You follow these rules. It's not exciting. Like, it's not what people think it is. It's not glamorous.
Yeah, I saw Wolf of Wall Street. I saw some of that stuff. It looks real exciting.
It's
a
nothing
different kind of trading there.
It's nothing like that. And it's like, I think that's the glamour that they sell you when people talk about day trading and whatnot. It's actually grueling. It's actually very difficult. It's like you're eating glass, but you're smiling. You just have
real
to
estate. I feel like real estate investing is very similar in a lot of respects.
Eating glass while you're smiling.
Yeah, eating glass while you're smiling.
Yeah.
We had lots of people that are like, "Can we come and shadow you at your office?" And I'm like, you can come over. I think you'll be bored to tears watching us just pound away on the phones and do the marketing. But yeah, you're welcome to come over and yeah, same thing. You can make a lot of money, but eating glass while you're smiling is a good way to describe that.
That is a good way, man. I love it.
Yeah. Yeah. So I mean, if anybody like if anybody's interested in doing this trading sort of thing, I would just say don't. Number one is don't. Number two is if you can't stay away from it and you have to trade, do it with a very small position. And you should treat yourself, your trading account, like one of the coins in your portfolio. So you'll have like, you know, Bitcoin, Ethereum, Hex, you'll have all these great coins inside of your portfolio. Well, you're going to be one of those coins. And you're only going to allocate money to a coin if it's performing well. So if you have a poor performing coin, you don't allocate money to it. It's not a good investment. And so if you're not a good investment as that coin in that portfolio, then you should allocate less to it. You're a meme coin at that point.
Right.
So
Right.
that's where you use your risk adjusted portfolio. But
could you would you mind, we'd love to look at some technical patterns. I think everybody in the show too would love to look at some of the things that you're seeing on you know, Hex chart, Bitcoin, Ethereum, some of that stuff, if you don't mind. Can you
no, for sure. Let me hit the share my screen here.
And while you're pulling that up, I'll go ahead. We've got a good group today, already really well attended. We appreciate you guys jumping in. Ted's here. What's up, Ted? Glenn's here. I had a great chat with Glenn yesterday. That was fun to talk with Glenn. He's got some LP positions going. Good to chat with you, Glenn. Switch Kills here. Bird Dog's here. And feel free to post in the comments. Is this Kotso or is this a different Coco? I don't recall. Problem Solver, great listening and learning from you both. And Problem Solver says, I'm glad I'm not the only one to put a high percent into crypto this bear. My friends and family think I should be institutional.
Problem Solver, people think I'm crazy.
Absolutely. Hey, we're right there with you. Justin says we should talk. We've got an amazing house on the west side of the island in PR. When you guys visit Rincon, you're gonna want to check it out. Absolutely, Justin. Cool. I put my you can message Corey too if you have him on Twitter. I put my handle in the comments, so feel free to shoot us a message. We'd love to coordinate in about a month when we're there. That'd be great.
Yeah.
Sloss here. Appreciate Sloss. Sloss, great.
Hey, can you guys see my my screen?
Yeah. Let me throw it on here. So much risk in not getting to RH projects now. History will tell the tale. Man, we feel the same way. In fact, we had we had a group call last night for our group, and some of our students in our group are in other groups as well. And one of the guys,
that's a horror story, bro.
Oh man, I hope it works out. I really do, but
I'm sure it'll work out some. But it's just so irresponsible of that particular influencer to do that.
Agreed. So essentially they're talking about selling all their RH assets to get into other assets. And I just think I'm with Corey. I hope it works out for them. But man, we talk about it all the time on the show here. You do not have an OA like you do in the Richard Hart ecosystem anywhere else. X did a 10,000X on the nose. Shout out to B Roots for pointing that out. You know, the market didn't do that on accident. And so, yeah, we agree. We just don't think there's a better place to be. So that's our take on it. But go ahead, Sprack Burger. Let's look at some of the things that you're seeing here on the chart.
Yeah, we'd love to know where we're going. And Wen Moon, bro. Wen Moon.
Yeah, we'll talk about that for sure. You can see my chart, correct?
Mm-hmm.
Yeah.
Okay, so this is Bitcoin, and we got to look at Bitcoin first before we look at anything. Obviously, Hex was modeled after Bitcoin. It's just with a proof of work change versus proof of weight, and we're starting to see these cycles start to hit these compressions. And like we talked about Bitcoin being near its top of its S curve. And we're on a logarithmic chart here on a weekly pattern. And if you notice, like some of these, this is the 200-week moving average, and notice how like on previous bear cycles, so we grinded all the way down and hit like this we broke this trend line. So like when we start trending down, it gets into this wedge pattern, find support on a previous cycle top or a local top, and you kind of bounce up and test above the 200-week moving average. And so notice out here, when you cross over, you break up above the long-term trend and start closing candles above the 200-week moving average. This is typically the point where we're now getting into that mid-cycle period where we're going to chop sideways towards the upside before the bull market really kicks in towards the end of that period. And so I broke these up into bear cycle, sideways, and then the last part of the bull run. This is right after the halving. So right after the halving is where we kick in and do this parabolic move. And this is logarithmic, so you can't really appreciate the amount of movement that's happening in this channel. But we separate from the 200-week moving average substantially, and we don't actually touch it again until we start hitting bear territory. And so in some of these instances, where would you would need to be taking profits along the way up here. And the reason you want to be doing that, that's when it's the most difficult to do. But that's when retail's coming in, and that's the
emotion.
That's when the emotion is the highest. That's when you need exit liquidity.
You're like, I can buy a Lamborghini, but I might want to buy 10 Lamborghinis if I hold for another 4 months.
Yeah, that's you have to just do the opposite of what the crowd is going to do.
Yeah. Oh, that's it, man.
And so if you were buying down here in the depression area, and you were buying here when we broke this long-term weekly trend line and started to trade above the 200-week moving average, those kind of two things confluencing each other, that would be a good time to buy. I don't care if you bought the bottom down here. That doesn't matter to me. What matters to me is that you caught a bid and there's confirmation that the market is going to support your position from here on up. You have less risk trading above these levels. I know it sounds sexy to say, oh, I bought the bottom. I bought the absolute bottom. I don't care. It's where does it go from here? Did you buy the bottom and then it dropped further down? I don't know. So like, I'm not here to be a genius, and I'm not here to impress anybody on Twitter or anything like that. I'm here to make money. And if I could capture 70 to 80% of this move, I have outperformed 95% of the market.
100%. And talk about too, as we're showing this chart, how charts are actually patterns of emotions of people. You were kind of talking about that yesterday in our private group. I would love to hear you just kind of touch on that before we start diving deeper in explaining what charts are. Yeah, for sure. So charts are just a reflection of the emotion that's involved in the group psychology. So the psychology of when price was at a certain point, and let's just this is Bitcoin, for example, but let's just say that let me give you an example. Okay, I don't know how old you guys are, but do you guys remember when the iPhone came out? Sure. Oh yeah.
Okay. So like back then you could buy an iPhone for like $100 or something, or like $200 or something like that. So when the first iPhones came out, they were like, some trading at like $100, $150. And then the market kind of got saturated with iPhones. And so the prices dropped a little bit. Right. And people were like, oh, they're on sale, so I'm going to buy them because they're on sale. And so the market actually trades down to a point where the market says, okay, this is a good price for me to buy an item that used to cost X amount. And so it's on a discount, and it's, the value of that item didn't change. The intrinsic value, the functionality of the phone didn't change, and the use of it didn't change. As a matter of fact, it got better. And so people started buying them up at a certain point, taking the supply off of the shelves, taking the inventory off of the manufacturers. And so the manufacturers are like saying, okay, well, we need to charge a little bit more. Why don't we produce a new iPhone? And the new iPhone is going to be triple the amount. And so there's this anticipation for a new iPhone at this price point. And so now you're willing to pay 3 times more because it's a better iPhone. There's less of it. Apple's making you wait to pay for this, right? They're actually making you wait in line, or you pay for it like you order yours like a month ahead of time or something like that. And so there's a low supply of this item that has high demand, and then it trades up into that frenzy. And so what you think is like, okay, when the prices drop again, you're like, okay, I can get that item, that high demand item, for a less price. I'm going to bid it up. And so that's all this is. It's like price has memory. And so when you think about like, oh, $20,000 for a Bitcoin, okay, that had memory for this market cycle. And we say, okay, if price ever gets back down there, I'm going to buy it. And that's why price is reacting to these previous market cycle tops. It has nothing to do with the intrinsic value. It just has to do with market psychology, in which case that, okay, it peaked at that level and then it crushed it by 300% and it went to 70K. So when it comes back to that level, it's cheap because they're saying I'm getting a discount. And that's all these levels are. And the movement away from those levels caused the largest psychological anchor points. Okay.
And hey, Sprack Burger, we're getting a little bit of, I think it's on your end, a little bit of feedback on your mic every 10 words or so. I don't know if maybe your mouth is hitting the end of your mic or something like that. We're getting some feedback, just FYI.
Okay. All right. Let me keep an eye on that. Anyways, so I guess what I wanted to say was that like the movement away from price, like some of these bigger candles, when they move away kind of violently, they create what's called a fractal. And all these market cycle tops and pivot points in the chart, they're known as fractals. And the reason why they're called fractals is because there was a point of transition where you couldn't find not a single buyer higher to bid this price up. So all the buyers gave up, sellers took over and pushed price in the opposite direction. And the more violent that event occurred, the more emotional attachment, psychological attachment there is to that area. And that's why you see like some of these support areas, like this wick back down here, it came back down here, wicked up. Well, that's because it's testing off of this local high that had a violent move away from it. And so those are just like anchor points. And then another thing that we were talking about with Corey is that a lot of people program robots to trade. And so 70% of the market execution is bots on lower time frames. So the bots are actually trained to look at these wicks. They're trained to look at these pivot points. They're trained to look at chart patterns. So it's a self-fulfilling prophecy as well, because we're programming the robots to do it. And so like the chart's actually manifesting that, even though we're trying to front run it or trying to get into these positions before the robots actually move the price in that direction. But anyway, if you look at the size of these bull markets, notice how they're getting smaller and smaller and smaller. And I did some math calculations. I took a lot of this data and put on Excel, and I figured out that there was some sort of a ratio between the bull market relative to its bear market, relative to the following bull market. And I came up with a number here that says we don't exceed $127,000 Bitcoin on the next run.
Huh. You think that's roughly the next top for Bitcoin?
That's my target.
That plays along with the top of the S curve ideology.
Yeah, these cycles are compressing more and more and more, and the liquidity inside of Bitcoin is increasing more and more. So it's going to take trillions of dollars to move this market from 80K to 100K or 100 or 125K.
It's getting extremely heavy.
Yes, it's getting heavy. And notice how we did this double top. And Bitcoin never did a double top. Bitcoin always had these blow off tops. And so, and here's the other thing
Couldn't the
too.
double top and market manipulation by Michael Saylor and that whole narrative of could it be part of that?
Yeah, I think there's a couple of theories that talk about what happened here and why we didn't do this blow off top. And then, we had kind of like this correction, and I think there was a lot of manipulation by the leverage and what was happening like with FTX and what was happening with.
Yeah, exactly.
So there was money being printed out of thin air, and there was money injected into the system that wasn't real. And so when you have leverage, you actually multiply the amount of money, that's the amount of liquidity that's in the system. And so you can have price artificially move around. Up and down, because there was people that were shorting, and then there was people that were longing. And so there was a ton of leverage that had to get shaken out of the market before it picked a direction. And it actually just, it did a double top. You could also look at other fundamental factors, like the fact that we were supposed to get a Bitcoin ETF and Gary Gensler rejected it, or the fact that we were supposed to have other financial products allowed to invest in this space, but it was rejected. So that might have had something to do with it. But if you notice here, like on this bull market, on this bear cycle, we traded under the 200-week moving average for quite a bit of time.
Yeah.
Before popping up and before breaking this long-term trend line. And so, like, you break the long-term trend line, and we broke it right here sometime in January. And this is like, okay, this is where I want to get bullish. I want to get bullish in this area. And I know I did not buy the bottom, and that's okay.
Don't need to.
We don't need to. I'm not interested in buying the bottom. I'm interested in getting size, and especially after we broke up above this 200-week moving average. And now it's like, now I have the market behind me. Now I have this the wind behind me, so to speak.
And there's not any other examples. Are there previously in Bitcoin where once you have this confirmation that you see a big reverse? I don't think that there's an example of that. Is there in previous cycles?
Previous cycles, every time we break this downtrend and trade above the moving averages, we never really look back. This is the zombie virus right here. And
which we could black swan anytime. That's just,
which we can have. Yeah, we can have this happen at any given moment. But let's just say that COVID didn't happen. But let's just say, I mean, really
supposed to be good for it now.
Yeah, but all this is just more market chop before going back up to the all-time high. And yeah, we the difference between this cycle and the cycle that we're currently in is that we blew past a lot of this psychological support that we had. Let's just say here, this is where I would be saying, all right, we took support, crushed it down, broke below it. I would want to get, I would think we'd get a sharp rejection from here, but we didn't. We broke above and traded it and used it as support to spring up. And then it went and tested the all-time high. And it tested the liquidity that was left here. In other words, it's sort of the last group of buyers that gave up and capitulated. And so there we meet another fractal. So this fractal meets with another fractal that's in here. And then that created a sell-off. And where do we find support? Right back here, where we had this previous support level. Again, this is like the iPhone memory. This is how these levels where price moved against violently. You come back in here and catch a bid right at the 200-week moving average, and that's where like these moving averages actually act as support. And you could have bought down here. You didn't have to catch this bottom part. You just could have bought right here and caught this up and caught most of this wave. But yeah, we're kind of interesting here because we've traded under this moving average for quite a bit some time. We could trade above this, but this is really a good area. Now, the only problem I have with the current market is that we are testing this previous fractal. And that's why price is having such difficulty getting through this area. It's because this was a massive, massive pivot point. And it's a big psychological area at the 30,000.
Which
So,
makes sense because
yeah,
this is supposed to be the sideways chop time, if you will,
yeah,
in the market, right? Leading up to the next Bitcoin halving, we should chop, probably have some resistance there, push back down, some, have some more dips. I don't know if we'd go back down to the 15K range, but
yeah.
maybe 22 range. I don't know.
Yeah, so like okay, so like that's the cool thing about TA is that like you don't really know what's going to happen 2 or 3 steps from now, but let's just say that we break above this 30K range and trade above it. Well, the next range is going to be up here at 37, 38, and then that's where it's like, okay, I'm going to be looking at maybe taking some short positions around the 40K range, because around the 40K range we hit another fractal, and this is another fractal that sold off and created this big massive sell-off. So somewhere in here I would be looking to go short, and if you look at this line, it trades all the way back to this fractal back here, and so this is where you had resistance, rejected, and then acted as support, broke through it, acted as resistance, broke up, support, 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 resistance, resistance, boom. So when we came back up in here, I expect a rejection from this area. So if we don't get it from the current range that we're at, like here, trade back down into the moving average to break up above and then retest on top of this, then we could actually shoot higher and reject off of that. So
Yeah.
because I don't know what's going to happen, 2 or 3 steps into the future, I just say, okay, well, if we get above this area, then price will magnetically move up to the next level, and that's you just take it like day by day or level by level, and price likes to move towards support and resistance. It likes to move to where the market thinks fair value is. Again, the iPhone, they made an improvement to the iPhone. It now does some XYZ thing a lot better than the previous model did, and so the market will just kind of like gravitate towards what they think fair market value is, and you just go from there. Now, could the market dump? Of course it can. It could break down below this level, right? Find some sort of support at some of these fractals that are back here, trade back up, and then trade down. All kinds of cool, stuff could happen in this level, in this sideways chop. And by the way, this is where, the Wall Street cheat sheet that people keep looking at.
Yeah, we've showed it on here a couple times.
We're at the edge of the chart. We're at the edge of one side of the chart, the left side of the chart, and the right side of the chart. That's where we are right now. So
the disbelief stage, I think, is what it's called.
Yeah, we're at the disbelief stage, and what's happening is eventually we'll get back up to the hope, and we'll eventually get back up to this side of the chart and trade up into these levels, breaking the all-time high. We'll eventually do that, but in the middle here, it's just going to get really choppy, and we can't really tell the future. If you're fully sized right now, you're okay, because we could dip down, we could dip up, we could do all kinds of weird stuff. But if you're fully sized right now, you're going to capture 80% of this move.
Yeah,
you're just going to have to hold. You're just going to have to hold, and especially if you're staked, you're going to be accumulating all of the APY on the way there.
Yeah, and we and Dane talk about all the time having market cycle stakes. Stake your hex out to the next projected bull run, accumulate APY while you're waiting and holding, and then when it's time to take profits, boom, your stake is due. Man, couldn't be a better recipe for success, in my opinion.
Yeah, I agree 100%. So I'm pretty much full sized in terms of like my allocation for this cycle. I do have a bag of dry powder waiting for Pulse Chain when Pulse Chain comes out, and I will, average it in a certain methodology that I have when that happens. But in the meantime, you can feel good that we are trading above these trend lines and we're trading above the moving averages. And even though we're going to get a bunch of cycle chop, we're going to get a bunch of FUD, things are going to
the washing machine.
Yeah, there's going to be quite a bit of stuff. Just know that in the long term, this is going to play out into the upside, and you're going to capture 80% of that move. And then once we get above this 80, the 60K, 70K range, once we get above here, I think it's safe to start scaling out, to be honest. I think I may start scaling out at about 80K, 90K, maybe take 10% of my position off, maybe more, maybe less, as the market kind of tells me what's happening. And one of the cool things that we could do is, let's see, maybe not on this chart. This is more like a macro long-term chart. But if I'm looking at something more of like on a, okay, this is Bitcoin. Oh shit. Yeah, I know my chart's all crazy. Let's go to like a daily. I like doing the daily because it gives you a little bit more information while still being a macro level. I know this looks like a crazy chart, but this was the last cycle top of 2021. And notice how, let me get rid of these levels. I have too much stuff on my chart. Sorry. But
all TA guys do.
Yeah, it's like, oh, I know what's going to happen next. No, you don't. So
at least you admit that. I love that.
No, you don't. You just kind of play it. It's kind of like, you're playing a game and you're like, okay, one opponent moves this way. Well, it's like a dance partner. You just move with the dance partner. Yes. So let's start from this cycle top and let's kind of like analyze what was happening on the last cycle top. Maybe this gives us a little bit of insight of what's going to happen. So we reached this kind of like a local top here, and we got rejected off of it, and then we sprung up. And the reason I marked this level up is because this is like that turning point, that pivot point that started the big move to break above this level. And when price got above here, it kind of retested there. So I'm looking at this trend line form and I see that it broke. And so this long-term trend line here, kind of daily, kind of just broke down here. So this is going to be my first sort of indicator that I broke a daily sort of trend line, sort of like okay, this is bearish for me. I want to see it react off of this and use it as support, and it did. It kind of did. So we're kind of still safe for now. And so because it used this area as support, what I'm going to do is I'm going to adapt my trend line to that guy because he's the new fractal.
Yes.
Okay. And so now we come back up here, and then now I'm using this guy as support. This guy is support, and he's sort of breaking under it.
Yeah, so now it was resistance.
Yes,
it couldn't get over it.
So it broke underneath it, kind of serpentined up and down, and then broke below it and closed below it and remained below it. And this is, I think, the time where you would have been able to get out. And if you miss this for some reason and you're like, okay, well, where's the next fractal? This is the next fractal. So you would adapt it to this, and you would say, okay, here's how it breaks back up, and this would have been your absolute last time to get out.
Isn't it great how the market gave you a couple different opportunities to go ahead and exit your position before the market went ahead and basically dumped on you, right?
And the cool thing,
it gave you a few opportunities.
Yeah.
Hey,
and those are opportunities.
I'm done here.
Yeah, those are opportunities where you start peeling off some of the position. So if you would say, okay, you took 10% off, like kind of on this massive run up, somewhere in here you took like 10% off, and then it did this another massive run up, and you traded off of this fractal, and you did like another 10% off, here, and then another 20 or something like that. So by the time we're getting to these other choppy levels, you're like 50% off out of your position anyway. And what I like to call this, and once you fall this far from the top, it's pretty bearish because you're crushing these long-term trends, and there's even a longer one from back here that you could kind of notice that we had this trend where it was moving up and it broke below it. And once you break a level like really hard like this, and you miss this and you're like, oh shit, like it's down to 46. You could choose to get out here and that would be okay, because obviously you're well above like that, 80% of the move. But you can also look for this last gasp of air. And the last gasp of air usually falls around the golden pocket, or the golden ratio here's around the 618 levels. So you miss this big fat move, price is going to bounce, it's going to rally up, and it's going to give you another chance to get out. But it's going to be somewhere here at the 702, 618. You may not get to the 786 fib level, but maybe at the 618, you could have, this would be a good opportunity to get out. And this was at that 58,000, 59,000 sort of level. And so so the technical patterns kind of gave you several, like you said, you had several opportunities to peel off of the position. You never want to sell out like all in one shot. You want to sort of scale out. And when you notice these fractals pop up, you can say, okay, this was a major pivot point right here, so I'm going to set up a fractal there. And you kind of just take it, step by step, and you say, okay, I'm gonna see what this fractal did. And so this is kind of a ladder point where this price moved up, laddered off of this, price moved up, laddered off of this, price moved up, and then boom, it broke. And so this is kind of an opportunity that you had to sell here. Now, what if you sold here and price just kept moving up? Well, that's okay, because you'll get another fractal to peel off some more of the position. Yeah. And you're not going to be 100% out, which is okay. Actually, I don't want to be 100% out of the of my positions. I'm not going to like completely go to cash. That's not like what I want to do in my portfolio. I'd probably just go like 60% or something.
What are your thoughts on the 4-year cycles? It's interesting to be able to go back and look, and the 4-year cycles seem to be playing out pretty well like clockwork. Not perfectly, but they seem to give us pretty good indicators of general tops and bottoms for the crypto market as a whole. And do you see any reason to say that this time is different?
No. However, we may be in the last 2 cycles of that 4-year cycle to where the volatility is tapering off, and we're not going to be getting these big massive moves, because what we talked about, Bitcoin getting so heavy that the amount of liquidity needed to double the price is going to be 10x the amount of money that's going to be required to move that market. Now, are meme coins still going to be around? Yes. Are altcoins and other tokens still going to be around? Yes. And those are going to make the money. However, the 4-year cycle will still be around. It's just going to be like, how should I put it? It's going to be dampened. It's going to be dampened.
With that being said, do you have, I mean, Corey and I have been thinking, you look at some of these last 4-year cycles, and one of them, Bitcoin found a top a year after the Bitcoin halving. I think the last couple, it was about a year and a half. And so what are your thoughts as far as time frame for the next rough cycle top? Do you have a range in which you feel, relatively certain we may be able to see that?
Yeah. So I think the next halving is going to happen sometime around next year I think it's coming early. I think it's in March or April, because the blocks are getting filled faster.
Yeah, that's what I've heard. Yeah.
So if it happens sometime around, let's just say April of 2024, that will kick off a bull run in Bitcoin, because we're pulling supply off of the we're reducing the supply of regular oncoming Bitcoin onto the market.
Right.
And we're increasing the amount of electricity required to produce it, and so the scarcity goes up, and then that also triggers market psychology. It also triggers a lot of trading bots. It also triggers a lot of activity at that point. And so I do anticipate that somewhere around there we'll have another bull run and kick up. And you know what, if it, you know, we said like maybe 12 months after that, you could get into like the peak of the market. Let's look at the previous top. So the previous top, we had the halving around that time, or kind of around the zombie virus time. And about a year later, it hit the first top, and then it hit the double top towards the end of the year. We may get something similar, like a rounded top around this part of the year, but like 18 months max, to be honest.
That's what Corey and I have been saying too. Yeah, 12 to 18 months from the Bitcoin halving, we should see a market top as a whole in that range, and that'll be the time to be taking profits.
Yeah, I agree. I'm going to be taking profits throughout this whole green box. So you let's just say you're not good at TA, or you're not whatever. You don't have to be. You could just say, all right, we are well above the previous all-time high, and we're in that last part of this. We're at the bottom of the ninth inning. Okay,
that's a good way to play.
I think we should be scaling out of this.
Where does what's the start of your larger rectangular box there? What's the range you have? Is that like is that almost all of 2025?
It's 2025.
Okay.
It's a bit the whole year of 25. Anywhere in there could be, which is what we anticipated.
Yes.
For the most part, right? Like we say sometimes it can get pushed into 26.
It can.
Depending on like, you know, what the Fed does with the market and how wrecked we end up getting, you know, who knows? So I want to keep my mindset open a little bit that it might not be exactly what it was last year or the last cycle. So I'm adaptable to the cycle. Yeah. Those are all really good points. And you know, we really have to. This is going to be a critical area, because we're going to be hitting the previous all-time high, which is kind of what happened here. I'm kind of marking these when we crush the previous all-time high. That to me is like, okay, start looking to sell, start looking for that exit liquidity, and start looking for the frenzy and the euphoria, and thousands of meme coins are going to be launching every day, and thousands of scams are going to be launching, and you're going to see the celebrities again. You're going to see my Uber driver is going to ask if I have SHIB.
Right.
You know, that kind of stuff's going to be, you know, again, and we saw that back in 2021. At that point, you know, your grandmother's going to be like, okay, how do I get into SafeMoon? You know,
right.
You know,
Grandma, it's not so safe.
How do I get my coins
and it
off?
doesn't moon.
How do I get my coins off Voyager? Okay, I'm sorry. So, yeah. So at this point, it's going to get interesting. What's more interesting to me is seeing this 200-week moving average sort of like compress up into price, and then how price is actually starting to actually hug the moving average a little bit better. And who knows, we could get to a point where the volatility dampens on Bitcoin so much that it becomes extremely stable, which would be okay, because now it has a chance of performing as a global reserve asset. Because what was the biggest thing that they didn't like is the volatility.
Right.
And so if we get rid of the volatility, but we keep the value, then that actually provides a use case for countries,
about that. Yeah.
governments. I'm taking profit into Bitcoin and Ethereum. So like, even though this market top, like you said, we're going to hit these tops. Okay. What are altcoins going to do? So now you look at the Hex versus Bitcoin chart, pick a coin that you want, like that you're trading, like Chainlink or something. Pick those coins versus So I could actually multiply the amount of Bitcoin that I have or the amount of Ethereum that I have using the altcoins. And then I'm okay leaving a lot of that sort of, even though we're going to possibly have we're definitely going to have a pullback, but I don't think the pullback is going to be as severe, because just as the volatility to the upside, these red squares are actually getting smaller and smaller as well. And so as they get smaller and smaller as well, then my pullback shouldn't be more than 50%.
Do you have a hex top call for this next bull cycle?
Yeah, let's do a little bit of a TA on hex before we wrap the show up, because I know that's what most people are wanting to know. When does Wen Moon hex?
So Wen Moon hex, I had a better price chart here when before TradingView deleted.
Frank likes your iPhone analogy. Yeah, that's a good one.
Yeah, that's kind of like how they explained it to us when we were trading. Okay, let's go to hex. We can get some like decent price data from past history. Let's go to like a weekly, something more than a few minutes, and you're getting some good deals on hex right now. And let's go.
Yeah, that's a fair question. Do you feel like now is a reasonable buy price for
it's an amazing time. It's an amazing time. And then let's look at again some of the same sort of metrics that we were looking at before, like the EMA.
And it sounds like you're clicking, but we're not seeing anything changing on your screen. I don't know if maybe you're sharing. Oh, do I? No, I have the right one up.
Hold on a second.
There we go. Now your screen just changed.
Okay. So we've got a couple of EMAs here. Let me get rid of the 9. Let's see, remove and remove. Sorry, guys.
No, you're good. We appreciate you doing this.
EMA, moving average exponential, and I want to change this to 200.
Yep.
Oh,
I have the 200-day moving average on my chart too.
200. Oh, this is a weekly. Let's go to a daily. Okay, there it goes. So.
Oh wow!
So,
look at that.
So we're trading right on it. We're trading right on both. Anytime we break above this, we're good. And then look at this long-term downtrend that we saw like on Bitcoin. So we break above this long-term downtrend and above the 200-day moving average. Right now is the kind of the, I wouldn't say the perfect time. There's no such thing as the perfect time. But for me, in terms of my rules, my trading rules, every time we broke above these two is the perfect time. Because you could have bought the penny and a half or 1.8 cents. You could have bought this down here and looked really cool on Twitter. But you didn't know if it was going to keep trading down. And obviously there's some cool stuff back here that, that's not in this chart, that for some reason they delete data from the past. I'll have to fix some of that. There was a level up here that actually had some good support for what this thing was actually hitting off of. But to me, I want to see the market sort of bid this up. And then when it does a pullback, this is a perfect time to do the pullback.
This is your DCA time.
Yeah, we're retesting the 200-day moving average.
And look right at the 618 level. So right at the fib 618 level, boom, right here. This is a nice time to again, using the same tools to get in, using the same tools to get out. This is where your technicals would help you. And okay, I've got a broken trend line, I've got a moving average, I've got a fib level, I've got all these things. I've got pulse chain launching with the copies. There's too many indicators. There's too many bullish patterns coinciding and confluencing for you not to get in. Again, not financial advice, but in terms of me, my rules, I'm going kind of heavy now.
Gotcha.
And then we're doing it with the T-shares, but that's a whole other conversation.
Yeah,
Sure,
for sure,
sure.
for sure.
So
And
do you, what's
strategy.
the likelihood in your mind that we see, you know, some short-term, some additional more short-term downside? Do you think that's likely?
Yeah,
You think it's
can we
less
trade
likely?
under the moving 200 moving average for a
Oh
period
yeah,
of time?
oh yeah, for sure. Yeah. It's
It
like
could turn into resistance versus support for
yeah, and so like
time period.
if you want to look at a little bit more what we want to call like local price action, you would go to like to the 4-hour. And so like on the 4-hour, yeah, we've been rejecting off of that 200 point moving average. And if you want to look
We've
at
been trading down in the channel. You see that channel there? There's a channel too it's going down into, and it seems like we're not testing the there it is. We're not testing that resistance anymore. It's like we're failing to test the resistance like we were testing. Is that correct? Am I seeing that right?
yeah, so what we are testing is we're testing this backside level that's over here.
This is great. I'm learning. This is awesome.
So we had a rejection point at this level, and then we broke above it and now traded in as support. And so we're coming back into that support.
Mm-hmm.
So we do have support underneath us.
Where's that at? What level is that? Is that I can't reach. Is that at the 5 cent range?
Yeah, somewhere between the 5.2 to 6.
I'm asking because I'm getting ready to load my bags again, and I want to know where. That's how I'm figuring out where do I want to load my bag. Like, I want to wait a little longer, or.
I mean, to be honest, anything in this level is a good DCA opportunity.
Yeah. Okay. And that's all the way down to the 0.051 up to the 6 cent level. Is that? Am I correct with that?
Yeah. So 0.5. Let's just say 0.053 to 6 cents. Any kind of DCA that you do in this area is going to be great. And then like you can even wait till we pop up above this channel, like you said, this downtrend, and it's actually tapering. So if we look at like what's happening here, it's not a funnel, it's a wedge. And we're actually compressing into what's known as the apex of that triangle. And so if you want to look at where
was showing us, and he was showing that it's going to push down into that wedge, and it gives Wells one more opportunity to accumulate at a cheap level before taking off.
And then this is the overall uptrend where we hit that bottom, and we've been trading up off of it. And if I follow this trend line, it's going to coincide with the apex of this triangle, and price could actually come down into some of these levels in here like this before breaking up and then trading to the upside. So, you know, anywhere around here about 5.2, 5.1, 6. If you're DCAing into this area, I think that's a pretty decent strategy. And then if you kind of go all the way back to what was happening back here, you have some support that's actually holding us up from this level, and you have some support that's actually holding us up from this level. And this is where I got my 5.3 from. So previous resistance became future support. So we have some support under us. I think this is bullish.
And where do you forecast for the next market cycle top? What do you, I mean, from what you see on the chart, what do you think would be the next?
So when I took those calculations, I don't have them on this screen, but when I took the calculations based off of Bitcoin and what Bitcoin did between its first and its second cycle, I think I targeted Hex at about $3. $3 plus or minus, you know, something like
sure. Yeah, this is we're just dudes on the internet making speculations. This is
plus or minus $1,000
minimum.
Oh, we're not going to 8,000.
I would say
it's just math.
No,
it's just math.
It's just moon math. It's just what did did Bitcoin do, and how can I extrapolate those values onto what Hex
Right,
did
the
do?
data we have to work with. Let's work
And
with
what
that
did
data.
Hex do on its previous cycle versus its pullback into these levels down here? And that's where I said, okay, I'm going to anticipate a certain multiplier based on that mathematics. And the mathematics gave me about $2.50 to 560, something like that. So
now, do you think, and of course we're going to get Hex on Pulse Chain. So are you saying in your head that's like a blended, $2 to $5-ish combining the two as a whole? Or do
yeah,
you think
that's an excellent question. And what someone would say is that it's a stock split, right?
right?
Yeah.
I don't necessarily agree with that 100%. And the reason why is because of the AMM fixer bot. And the fixer bot is going to inject extra liquidity into the pools to provide value. So it's not like 1 + 1 is going to equal 2. 1 + 1 is going to equal 3. And I know that sounds kind of so.
No, it makes sense. Market maker. We've been talking about market maker. Gosh, people need to listen.
It's important to look at value in terms of how much liquidity is in. Remember, you can only trade off of two things: price action and liquidity. And if price action is there, but there's no liquidity, you can't make money.
Right.
So we're going to have the liquidity. We're going to have the amount of liquidity on both chains. Now, is there going to be a pullback? Is there going to be volatility? And that's where I gave myself a little bit of that room, where if, let's just say Hex is only on one side of the chain, then yes, it could hit that $5 kind of easily. But I'm giving myself like some conservative cushion there and saying $2.50 to $3 because of that.
That's each, yeah. And I don't know about you guys. If I had Hex
on each side,
on each side.
Oh, geez.
Gosh, if I had $3 Hex on each side.
Yeah,
those market cycle stakes, yeah, game over.
It's game over, dude. Just my Hex portfolio alone. I don't even know what, oh God. That's not including like Pulse X, Pulse Chain, everything else that we're playing with and having fun with. Man, just my Hex alone. Oh gosh.
Right.
Yeah. And I know that there's not a lot of data here, but when we this is logarithmic, and just seeing the projections that we could get up into these fib levels that I'm kind of tracking, the $2, this is kind of easy to hit in terms of like a target. This is kind of like a layup right here, the $2. So $5 would be bullish, and there's I'm seeing a lot of people saying $10, and that would be great. That would be great. I would welcome that. I would 100% welcome that. But I mean, I'm trying to temper my psychology, and I'm trying to just prepare myself for what could happen. And I guess one last thing before we kind of wrap this up, but you notice how we had this blow off top and we rejected off of this support that flipped into resistance. So this was an area where you should have been selling. And I know that sounds
why weren't you on our show like a month ago?
Blasphemous.
I know.
Well, look at that. It's played out perfectly.
I wasn't selling, but this would have been if you were looking to. I'm in the accumulation, remember, because this price, this 1.3 price, is 10x to 20x less than that big 80% move that I'm trying to capture. So I'm in accumulation during this whole phase of the market. But if you were like a day trader and you were just kind of like, oh, let me just, I bought, a lot of it down here, and I kind of want to like pull some of it off so that I could pull it into like Pulse Chain or something else like that, then this would have been a good place to take a little bit of that profit based off of all this support.
Oh, yeah,
and
look at that.
Down. And then remember that the more violent that this move away from that level becomes, the more anchored it is in the market psychology.
Okay. More violent, more anchored. Interesting.
Yeah, these are all just anchors. Like if I sell you an iPhone for $600, you're going to be like, what? Give me that freaking iPhone, because they're $1,200.
Right. Yeah.
They're $1,200. So
do you have any thoughts on the Hedron top? Any ideas? Are you monitoring Hedron at all?
I am monitoring Hedron. I just think that Hedron is a little bit too early. And
hard to project out.
It is a little bit harder to project out. However, it is doing
data.
Yeah, I don't have like the 200-week moving average type of data, but like in terms of Hedron doing some local type stuff, it is forming a wedge. It is forming this like consolidation wedge that I am looking at. And there is a lot of bullish potential to this chart because we're trading at the bottom of this wedge, and it did break some of these.
And if you're showing something else, we're just seeing hex right now.
Yeah, we're seeing the hex chart, Sprack.
Let me go to my other chart. Sorry.
Oh, there she is.
Okay, so this is Hedron, and this is on a larger time frame, like a weekly pattern. This is the launch date, which is acting as sort of like a resistance, support, resistance. So we really need to get above this level, which is at 4 zeros and a 4. And so right now we're this level's acting as resistance, and we need to trade above that. And we have a good sign here that we broke this local downtrend.
Yeah.
And this is a weekly time frame. These are big time frames. The bigger the time frame, the more
true it is.
The more true it is. One of my mentors told me, it's like when you look at time frames on trading charts, it's like you take your family to a picnic, and it's like, okay, the kids get out and they run around in the playground, and you're like, okay, kids, it's time to go. And so mom and dad actually control the larger time frame. The kids could run around for a little bit on the smaller time frames, but eventually when the market moves on the bigger time frames, it destroys all the patterns that are on the smaller time frames.
Got it. Okay.
I like that analogy.
And there's another one where, well, grandpa needs to go home and take his medicine. So everybody's got to get in the car and go. So
that's the monthly. That's the monthly.
Yeah. So you could say, okay, there's always a bigger guy than you. There's always a smaller guy than you. And price is always fractal by nature. And so like, if you look at some of these patterns up here, where we did like these tops, where we did these like double, this is a fractal, by the way, this white, and let me mark it. And let's go down into time frames, because multiple time frame analysis is kind of important. But if we go in here on this day, August 29th, and we drop down into like the 4 hour, what we're going to see on the 4 hours, we're going to see some fractal activity happening here, where we hit like these patterns. And I'm going to turn on like an RSI. And RSIs are kind of good to map up what's happening on a different level. But you have something like this, where you have like this uptrend, right? And then on the RSI, you start to have these downtrends.
It's a divergence.
And now you have a divergence. And this is where like you could see some turning points in the market. And so at these fractal areas on a bigger time frame, kind of like mom and dad time frame, on it's like a smaller time frames, you'll see price actually already start to diverge. And you'll have this divergence setup. And this is a great trade, that type of trade setup. And you can even go deeper. You can say, okay, this is the 4 hour. Well, let me go down to like the 15. If you go down into the 15, you will see a similar pattern on the 15. Let's see, do I have data back then? I don't think I have data back then. Let's go to the 1 hour, just to try to like show the point that even on the 1 hour,
It's following the same rules. Yeah.
even on the 1 hour, I have the same fractal here, and I have the divergence here.
Yep.
And so, yeah, price is fractal by nature, sort of like the Fibonacci levels, sort of like the everything that's in nature.
It's interesting.
Has
it
a
fascinates
fractal
me.
within
That
a fractal.
Fibonacci's.
And
Yeah.
you could go down in time frame all the way to the DNA and look at like how the price action or the DNA of price action is based off of these fractals. And it's kind of fascinating, like how all this stuff works.
It is fascinating. It's the universe. It's weird. It's just all the universe and the math and everything works. It's the fingerprint or thumbprint of life. It's really, really fascinating to me.
Yeah, for sure. But yeah, I'm bullish on Hedron, bullish on Hex. These are great buying opportunities. If
do you think we see a pump before pulse chain, or do you think the whales are going to try to keep the pricing kind of ranging where we're at right now?
I think they're going to keep it where it's at.
I do too.
Good. Now I'm glad you don't spew out narratives that everyone else. Thank you for being a truth teller on our show.
Yeah,
we appreciate that.
Yeah, I got to keep my my what do you call it? My emotion in check.
That is the most important thing, I think, with any asset class that you're participating in, any investing, whether you're trading or you're long-term investors, keeping those emotions checked and put aside, right? Like you can't let the emotions have any involvement in your investment thesis. It's tough. That's easier said than done.
Yeah,
that's way easier said than done. I have learned a lot about myself during this crypto journey so far.
Yes.
Yeah. You'll learn quite a bit. You'll get to know yourself pretty well.
Yeah. I've learned I'd like to be a little bit of degen sometimes, and I have to allow myself to do that with certain, a small piece of my portfolio, so I can get it out of my system, so I can actually hold my blue chips that I love, like Hex, Icosa, and the stuff that I feel like it will have some long term. Mainly the RH coins, Hex, Pulse Chain, Pulse X. Those are gonna be my core assets for my portfolio.
Yeah, and I think all of the smaller like layer 2 tokens on top of like the big layer 1 tokens
I do too.
Actually...
I love like the maxi tokens, even though I don't have much of them. I think they have their place in the ecosystem. Obviously, the derivatives of like a Hedron and Icosa. They're all going to have their place in the ecosystem and hopefully have their time in the sun to shine. Yeah.
Yeah, 100%. And I'm pretty bullish on most of the space now. Most of these charts I've been kind of tracking most of these most of the coins, Aave, Uniswap, most of the like Phantom, AVAX, and a lot of them have already bottomed out. And they've already kind of hit these previous support levels, and they're already like trading out of their channels. And so price would like actually trade from a lower channel into a bigger into a higher channel, then a higher channel, then
it looks like sideways chop.
It's a lot of good sideways chop, and the like these coins, most of them, they're waiting for Bitcoin to move.
Yeah.
Right.
And once Bitcoin moves and the liquidity flows into Ethereum, then the liquidity flows into the smaller altcoins, and then you'll see these run. And so something like Aave is trading at $73, but its previous all-time high was around $600. Most of the altcoins could do a 10x just to get to their previous all-time high, and who knows what they could do above that. And so I almost don't have any Ethereum left. I think it's just mainly cycled into the alt positions now and waiting for those to pump. And then again, once the market hits a cycle top, I could 10x my Ethereum position or 10x my Bitcoin position. And I'd rather take profits into those two assets than into USD. Even if those assets pull back by 50%, I made it 30x.
Yeah, but why wouldn't you just go to stables when you could go buy back your position? If they're gonna dip, you could be up a 60x. You know what I mean?
No, I agree with you.
Or use that USDC or USD to go into real estate. If real estate is some kind of bottom, you transition the assets. You know what I mean?
Yeah, I'm a fan of both of those strategies, and yeah, I'll be taking profits and along the way into stables and into hard assets like Bitcoin, Ethereum, because I don't want to be 100% out of them.
That's respectable too. I can understand that too.
Yeah, and especially things like Pulse. Like let's just say and I have multiple accounts, and I created an IRA account for Hex. So I have Hex in my IRA.
That's GOAT.
Yeah,
that's a GOAT move right there.
So you're not trading HSIs into stable coins. You're not going to do that. So you're going to just keep these hard assets that in the future are going to look like these little wiggles down here on the bottom of the chart.
Yeah, that's definitely I can see that for
So
sure.
you can have several buckets. I like compartmentalizing things. I like compartmentalizing. So like if I have a trading bucket, it's a certain size. If I have a short-term cycle, like this cycle, I have like a short-term cycle bucket, and then I have like the long-term buckets, and those I don't sell.
Yeah.
Those are like 10-year hodl positions.
Yeah, those are if you want HSI stakes, they're great for that. If you that's part of it.
Yeah, I'm staked on HSIs on a lot of those. I have some Ethereum on things like Lido and Rocket Pool, just constantly printing money, I'm not going to sell the golden goose that lays golden eggs.
Gotcha. Yep.
I'd sell the golden goose if someone would give me 1,000x on that golden goose.
Hell yeah, I would.
I'd go buy the golden goose.
You, Dane.
A discount.
Yeah.
Yeah. I mean that's fair. That's fair too, and that's what my short-term trading bucket is for. It's for that 1,000x. So I could take that 1,000x in the short-term bucket and ride the cycle, and then have this wealth bucket. This is all part of my training, where it's like if one of your real estate properties was doing well and it had an anchor tenant and they paid really well, and it's like, and someone's offering you more money than you bought for that property, it's kind of
how much more money they
depending
offer.
how much more. If you said okay,
everything's got its price.
Everything has a price. Everything has a price. I 100% agree with that.
The only thing is like your family, like your wife, your kids, maybe your friends, your really close friends. They don't have a price, but everything that's like material or an asset of any sort, man, you could pay me to get out of it.
Yeah.
Not going to disagree. I'm not going to disagree.
Let me. I've got to jump out on a private call with one of our students. So I'm going to jump off that. I'll let you guys kind of handle
wrap it up.
Here, but appreciate you, Sprack. This has been great.
Yeah, no problem.
I'll wrap it up. I got some more time.
Cool. See you guys.
See you, Dane. Here's a question that we can hit. I know I saw these too. I also look at fair value gaps, Sprack, and I know there's a couple on the Hex chart. There's a fair value gap at the 2.7 cent level and a 3.7 cent level. Now, from my understanding, the fair value gaps don't have to be filled, do they?
Where are you seeing this on Hex?
It's on Hex at the 2 point. I'm not sure. Hey, Glenn, do you know if it's on the daily you saw this, or is it on the weekly, the 15-minute, 4-hour? It was from the last run up, Sprack, from the 1.7 cent level, daily time frame. There.
1.7.
So he's saying that 2.7 cents and 3.7 cents, there's fair value gaps.
2.7. So are you talking about here?
No, I don't think it's back in there. I think it's when it was running up right there, and then the price didn't come. The price did come back and correct in there, is what I'm seeing.
Yeah, there's no
4
gap.
hour. He said, go to the 4 hour. See if you can see
Yeah,
that.
yeah. On the lower time frame, there's big gaps. If we could see something here.
See, even that big gap there was a wick that flushed down in there and basically equalized the market.
Yeah, so we would have to go down into like a 15-minute to see some of those bigger gaps, because the 4 hour will actually hide a lot of the gaps. This is a 15-minute chart, and you could see that price came back down and picked up some of this liquidity.
Yep.
And maybe I'm using the wrong contract, because this is like I think a contract that's generated by TradingView. But yeah, when you get down, yeah, I think maybe I need to go to DEX tools. So let me switch to this tab. Let me go to DEX tools, because for some reason TradingView kind of sucks.
Yeah, I have a
So
TradingView.
we want to look at this chart, and we want to look at something like the 4 hour. I want to zoom in on this time frame that's down here. And yeah, I think maybe there's more wicks on this.
Yeah,
this
price
contract
has been filled.
But price has been filled, and
because you get fair value gaps when you have like bids but no ask, right? Isn't that like how like where the market's not equal on its bids and ask, I guess?
Yeah, it's called the spread, and the buyer has to jump across the spread to meet the next seller, and
right.
And if there's not enough liquidity to fill that gap, then you'll have these big gaps. So yeah, I can't see them here, and maybe the price chart is a little
I don't either.
manipulated by
especially the massive wick that looks like it went.
So he probably went to fill this level here, and went right there and picked up the rest of that liquidity. And then I want to mark this level, because that was a big fractal. This was a big like turning point in the market, and it kind of coincided with this uptrend. This one anchors it, and so as price keeps grinding sideways, approaching this level, the floor starts to kind of come up. In which case, the most, like, let's just say price wicked back down, the most it could go down is to 4 cents.
Got it.
Or 4.3. And if we had like a big scam wick, this level should hold it. Doesn't have to, but it should hold it. Yeah. But anyway, anything else, Corey? Anything else?
No, man, I think we covered everything. Won't you let the audience know where they can follow you at, obviously, and then from that point, we'll maybe try to make this a regular weekly call. We can get on here and kind of just get market sentiment to where we're moving to, where can they all find you at?
So I'm on Twitter as Sprack Burger. So that's me. I use this robot because I like robots. I'm an engineer, so I like the robots and stuff like that. And so I'll just post random, shit posting on here. I'm not really that active on Twitter as much as I'd like to, but definitely follow any Hexagon that's out there. I'm a big fan of Axis Alive. I do get a lot of inspiration from Axis and Crypto Sloth and a lot of these guys, and it is time consuming, but form your own narratives and write things down, write down a playbook, and follow through with it. Treat it as a part-time job, and I think you're going to do well. We're going to do well this season.
Love it, man. Well, we appreciate you so much. Thank you. And guys, keep following us. Hit the like, hit the subscribe for us to help the algorithm so we can pump all of our bags and so we can keep bringing you more amazing content like this. And once again, Sprack, we appreciate you. Thank you so much. And there's your Twitter right there. Boom. Yep. Go follow him there, guys, so that way you can help him put out more content and hopefully get some more TA stuff, man, because I think your TA stuff is fire. So I would like to see you doing a lot more of this for the community as a whole. We need more of this, you know. We, like you said, we have like people like Access. We have the data guy who's like Crispy. And we just need more and more of this stuff to help us ensure that we're in the right place at the right time and that we're going to see an amazing market cycle on the horizon. So thank you, man. I appreciate it, Sprack.
Yeah, no problem, man.
See you guys.